If you've been walking around your neighborhood in Toronto recently, you probably notice a lot of for sale signs and very few sold riders on those for sale signs. So, are we about to see this market take a turn for the worst? Hi, my name is Adam Nadler. Thanks so much for tuning back in again. If you haven't yet already, please click that subscribe button down below this video and join our community. And if you like this video, please don't forget to click that like button so this video can be pushed out to more people like yourself. And before we jump into the analysis of the market, if you have any questions and you want to chat with me about it, please feel free to use the first link in the description down below. That'll connect you to a calendar where you can chat with me at a time that is most convenient for you. Or you can always just shoot me an email to adam@visionrealestate.ca, any question that you have, and I will send you a custom video response within 24 hours. All right, so jumping into it, we are seeing headlines all over the place. The market's making a comeback. The market's about to hit rock bottom, or the market is about to have the floor fall out from underneath it. So which is it? Now, if you've watched my videos before, you know that I am super data driven. So here we go, jumping straight into the numbers of what actually is going on. May was a terrible month for the real estate market in Toronto. Year over year, sales were down by 21.7%. And month over month, they were down by 1.8%. And now let's remember, putting this into context, 2023 was a terrible year for the market when it comes to sales. So to say that this May is even worse, in fact, significantly worse than last May, is a big deal. And when you compare that to average price, well, it doesn't paint a pretty picture. Year over year, prices are down 2.5%. And month over month, well, they're about the same, hovering at just 0.3% of an increase. And of course, like I said at the beginning of this video, it's because we've seen a ton of new inventory hit the market. Total new listings are up by 21.1% year over year. And the sales to new listings ratio is down by 20% year over year. So what this means is that we have a ton of new inventory flooding the market and sales are way down, which means we have a lot more supply and the demand is simply not there to eat it all up. And the natural byproduct of this is that houses are sitting longer and longer on the market. The average days on market for a property is up by 40%. On average, it takes about 28 days to sell a property in Toronto. And for most of the world, that's not a crazy long time, but for our market, it actually is a fair amount of time. And although they just did cut interest rates by a quarter point, well, we all know that a quarter point decrease from the overnight rate at this point in time is not really going to buy anybody a cup of coffee. So we're in a huge slump for sales, and that'll probably continue unless we see another interest rate cut in July. And is that a possibility? Well, nobody knows for sure, but because our economy is starting to really suffer and we focus and depend on housing so much for our economy to actually function, not to mention that it's actually a huge political hot button issue these days, I think it's possible that we actually might see further cuts as the Bank of Canada scrambles to put the toothpaste back in the tube. So if you're keeping a close eye on this market, yeah, there definitely are opportunities out there and they're not that hard to find, but those opportunities are very specific to the different types of moves that people can make. And what I mean by that is in a softer market, you typically want to be seeking out an upsize, not a downsize, because we can see the relative percentage price loss across asset classes as being relatively the same or within a point or two. It's easy to see how that would translate into a much bigger discount dollar-wise on a bigger purchase rather than selling a smaller home. Meaning that if you're upsizing right now, although you're going to take a loss on what you're selling a little bit compared to the peak of the market, the discount on what you're buying, if you're buying something bigger, is going to be a greater discount than what you're losing on the sale. And the same holds true, but in reverse for downsizers. So if you are a downsizer right now, this is really not the time for you to be making a move. Typically, you want to be trying to downsize in an upward swinging market where the margins work more in your favor the other way around. So overall, I think everybody's just going to be watching very closely what happens in July with the Bank of Canada to see if they're going to lower rates or not. Personally, I think it's a coin flip, and I don't think that it would be crazy to assume that we will see another rate cut. But hey, that's just what I think. What do I know? Let me know what you think in the comments below. Thanks so much for tuning in again, and I'll see you next time.